Oh man, welcome back to another live stream. We've got a critical CPI read which could send us either rocketing to the upside here on Bitcoin or crashing back down to some of those levels we were calling for a couple of weeks ago. Bitcoin showing some impressive strength yesterday, but today is really going to decide whether this was just a flash in the pan and whether we're really coming back down to retest that 25,000 level. You can see here 4 minutes from now, we're going to get the CPI release. I will get it live up here and we will analyze how it moves the markets. I will briefly run through the expectations before we get that. So you can see Bitcoin here yesterday and today managing to get above its 4-hourly EMA ribbon, come back down, retest, but you can see it is getting rejected here slightly from this 26.2 level. We know that I said yesterday we need a 4-hourly close above this peak here, this 26.463 level, which I labeled here. You can see we wicked above it, but we didn't get that 4-hourly candle close. We did indeed get rejected by the orange line here, 26.2. So Bitcoin needs to break this peak here, close above it, and then we can start looking at price targets getting up to the next level, which is this horizontal resistance at around 26.8, followed by working its way to 27.6. Those are the horizontal levels we're seeing on the 4-hourly chart. Now, of course, we know this all stems from the fact that markets are pricing in 92% this notion that we're going to get a pause, right? They've put it in. They've said next week at the FOMC meeting, which is this time next week exactly, we will get a pause. But we have this critical piece of data. We have today the CPI data coming out, tomorrow the PPI data, both pieces of data the Fed look at very, very importantly. Guys, make sure you smash up the likes if you're appreciating this live stream with the data. Good to see so many familiar faces in here. Barney, Mike, Andrew, Brandon, Justin. You guys have been supporting throughout this bear market. To shout out to you guys and the rest of you, Suresh as well. Benoit, good to see you as well, supporting the channel through this bear market. We're nearly through this bear market, guys. So congrats for hanging in there and getting your final few nibbles. So, quick rundown of the expectations. Remember, you've got headline CPI and you've got core CPI. Really important this time around because headline has food and energy in there. And what do we know has happened over the last few weeks? We had Saudi and Russia decide to increase the supply of oil they're pushing out there, right? So, reduce the supply. That's pushing up prices. So WTI crude is up 33% since the start of July. It's now $89 roughly per barrel. That's a new 2023 high. So year-on-year inflation figures are expected to shoot up here from 3.2, which is what you can see here, up towards 3.6, which is not great, but markets are expecting it. Month over month, similarly, for the headline figures expected to jump from 0.2 to 0.6. That is not fun whatsoever, guys. Any extra misses on those and expect the market to really fall to the downside. They've already priced in a big jump on headline inflation, so that's going to be a problem if it comes in any higher. Then we switch the focus onto core, which takes out that oil element. It takes out the energy element, and this is where we're expected to see the decline. The 4.7 is expected to drop down to 4.3. We want to look out for that. The 0.2% month on month is expected to come in at 0.2% again month over month. So we've got to take a look at those. Anything other than that, if it comes in higher, right? If we see like a 4.5 handle or we see a 0.3% month on month, that's going to be a problem. Do expect to see some pain in the markets. We've got 1 minute until the CPI release comes through. Please take that moment to smash up the likes and support the channel. Give me your expectation for CPI headline. What are you expecting, guys? Remember, the expectation is 3.6. Give me your expectation in the comments below, and next to it, put whether you think we're going to get a pump or a dump. Right, Mr. Got Plenty, good to see you. Omar, good to see you. Shoaib, oh man, good to see you. Wakaz, good to see you. So many familiar faces. Please do smash up the likes, and I will go and get this CPI reading refreshed for you guys as we get the countdown towards this important CPI. Remember, we've got the Bitcoin just here on the minute chart. Bunch of traders playing games. Look at that tank on the S&P. This is why you don't want to get wrecked here, guys. Be very, very careful if you're trading on the minute chart. Please only do so if you're very experienced. And let's get a refresh now, and let's see what we get here for the August CPI reading. Just refreshing here. Still nothing come through. Let me know if you guys get it before me, as sometimes some of you do. And there you go. August CPI for all items rises 0.6 exactly as expected. Let's pull up the PDF, guys. Let's take a look at what it says on here. Always takes a little while to load up. There we go. And we can see here 0.6 as expected. Let's take a look at the headline figure coming in at 3.7. A little bit hot, guys. Remember, they already priced in 3.6. It's even higher than that, 3.7. Let's take a look at the core. Core came in at 4.3, exactly as expected. Okay, so a little bit hot on the headline, guys. Let's see how markets are responding. Otherwise, it came in at expectations. That's why you're seeing the dump here. Bitcoin falling here down to 26 flat. Are we going to lose 26? And is this now going to be the reason we fall down to 25? We're going to have to see what's going on there. So S&P falling here, 444 here in the pre-market. It's not a horrible miss, but it is a miss. Remember, markets already said, look, we're going to go from 3.2 up towards 3.6, and then it comes in at 3.7. So let's take a refresh on the charts, see if they've updated that. There you go. So it's gone from 3.2 up to 3.7. The month over month came in as expected at the 0.6 reading, which was as expected versus the 0.2 previously. That's hot, guys. 7.2% run rate of inflation still. Of course, they're going to blame that on the energy, so we have to look at the core. And if we take a look at the core, that came down to 4.3. That's good, but you can't really have Jerome Powell and the Fed coming out right now when inflation's at 4.3, which is 2.3% away from their 2% target range, claiming they've defeated inflation. They've not defeated inflation yet, right? So that's going to be the main precedence we've got right now, is to say, look, the work is not finished, right? It's not complete. He's probably going to have to do a couple more interest rate hikes. Now, keep in mind, guys, if we just go back just a few months ago, market participants had expected and priced in that we would get a rate cut late in this year, which is like now, right? October, November, December. But then, just a couple of weeks ago, that changed to then pricing it into early 2024. Now, the markets are pricing this in to not get a cut until at some point next year, right? So if you take a look at this here, you can see here that the majority of the market, 35% of the market here at this point, in June, so by summer of next year, are pricing in a rate cut. Right? So that's where they're really starting to push this expectation further and further away. And that's what's causing some of the pain in this market and the stop-start movements we're getting. Mr. Got Plenty says, let me get my chips. I'm going to get this dip. What else are you guys doing? Are you guys looking to buy the dip? Let me walk you through what levels I'm looking at for, guys. Remember, none of this was a surprise for us. How was this a surprise? It's not a surprise for any of us. We know that this battle against inflation is not quite done yet, right? We knew that oil prices were hiking and that was going to lead to a high headline figure. The core figure came in as expected. But more importantly, Bitcoin is below its EMA ribbon. These last couple of days moving to the upside here, it's against the trend. We're running into the EMA ribbon. So how do we expect, unless we get a massive catalyst here to move us above 27.3 and close above our daily EMA ribbon, then we've got something positive to look at. But realistically, what we do know is that the main pattern we are falling from is this huge rising channel, which I've continued to share with you guys, right? This is the pattern I've shared with you guys. And I said, guys, the first pivot point when you fall from this blue channel is to come to the first pivot point at 24.8. That is the level we wicked down to a couple of times here. Now, over the last couple of days here, you have seen support show from 24.8. But unless it goes past these peaks and starts working its way back here, it's not enough. We'll just end up curling over. Right? If we cannot get any good strength up here, all that's going to happen is we'll just end up curling over and playing out what is the M pattern I've been warning about. This big M pattern, which price target brings you all the way down to 17.8. Now, of course, before 17.8, you do get a couple of support areas. You've got a little bit of support here at 20,000. People will be buying the dip at 20,000. And then if we fall even lower down to the bottom of the channel, 16.4. I don't think this is going to come into play. I think we're looking at these kind of areas in between these two purple lines is where I'm looking to nibble. These are the areas I want to be nibbling at because I think these are the areas we'll start to see some important support. But this falling below 24.8 really does change the structure, because right now you can still make the argument that we can go down, touch, come back up, down, touch, and bounce, and onwards we go, right, to the upside, creating a W pattern, also known as a double bottom pattern. But if we play out the double top scenario, which is going to now create this scenario down here, now the structure has changed. Now we've got a lower low below this previous low, which is a bit of a problem. Okay, so that's what we need to watch out for here. Please do smash up the likes, guys, if you appreciate these live streams. CPI coming in pretty much as expected, apart from the headline coming in a little bit hot. So markets are reacting to that. Bitcoin holding here at 26.1. Not too much good news, not too much bad news. pretty much as expected here on the CPI read. Let me reiterate for those just joining us, 0.6% here on the headline, month over month, exactly as expected. The headline figure, the year over year, came in a little bit hot at 3.7. Markets were expecting 3.6, and your core inflation was expected to come in at 4.3 year over year. It did indeed come in at 4.3 year over year. So if I show you that in the chart format, you can see 4.7 dropping down to 4.3. And if we take a look at the month over month as well, 0.2 up towards 0.3. Now, it's also important that we look at this figure here. This figure here is what markets will probably start to focus on now, because what was expected on the core, take away the energy excuse, strip that out, right? Forget it. You're blaming Russia, you're blaming Saudi about their oil prices. Okay, let's take that out. Let's focus on core. And then we can see that core did indeed come down from 4.7 to 4.3, but the run rate is not good. It just went from 0.2 to 0.3. So if I'm being critical and I'm really digging into this report, and markets may start to do this over the next kind of 10, 15, 20 minutes, maybe half an hour, they will notice that 0.3% month over month inflation is an annualized 3.6% run rate. 3.6% core inflation run rate is still too high, right? It's peaked back up. It's higher than we've seen in the last couple of months. We've gone from this 0.2 level up again to 0.3. So remember, 0.2 gives you 2.4% annualized inflation. 0.3 gives you 3.6%. This is a significant spike here, and you can't blame energy. So what are you blaming for here? That's the question you've then got to look at to find out the answer. Why is inflation not cooling down? So with inflation not cooling down, we have to then look at this to see, okay, how many more rate hikes is the market going to price in? The market seems set that they're going to price in a pause at this next meeting. But will they change their mind? Now we need to watch this over the next 7 days to see if the market starts just unwinding a little bit. Maybe this drops down to 80, 75%, just to price in the slight probability that maybe we do get a surprise rate hike next week. But more importantly, most of the market seems quite certain that we will get a rate hike at the next meeting. So you can see here, 53% of the market thinks we'll stay paused at the next meeting on November the 1st. 42.8% of the market is saying, no, actually, we probably will get another rate hike up towards that 5.5 to 5.75 range. So there you have it, guys. That is the CPI reading we've received today. Markets are reacting as we speak. If you appreciate this type of content, smash up the likes. Don't forget to subscribe, and I'll see